Adobe. You know the name. For decades, it's been the undisputed king of creative software. I mean, Photoshop, Acrobat, Premiere. These aren't just tools, they're basically verbs now. But today, this software titan is at a huge crossroads. And for investors, well, the path forward is anything but clear. Okay, so let's get right into it. After a really steep drop in its stock price, the big debate around Adobe is just raging. Is this a golden opportunity to buy a world-class company at a massive discount? Or is this a flashing red warning sign that maybe, just maybe, its best days are in the rearview mirror? And this chart really just gets right to the heart of the problem. I mean, look at this. While the broader market, the S&P 500, has climbed a very respectable 12% this year, Adobe's stock has plunged more than 20%. That is a massive underperformance, and it's forcing everybody to ask one simple question. What in the world is going on here? To answer that, let's first put on our optimist hats and explore the bull case. This argument says that, despite the shaky stock performance, the fundamental business is still an absolute fortress. And it's a fortress that is now seriously embracing the age of AI. The whole bull case really stands on three incredibly powerful pillars. First, you've got its unshakable market dominance. Second, it's just incredible financial strength. And third, and this is the big one, its aggressive and, crucially, successful push to actually make money from artificial intelligence. Yeah, this quote from Morningstar just perfectly captures what analysts call Adobe's wide moat. Think about it. Its products are so deeply baked into professional workflows that the cost and the sheer hassle of switching to a competitor are enormous. The entire creative industry literally runs on Adobe's tools. And that dominance? Well, it translates into just jaw-dropping profitability. Adobe has gross margins near 90%. That means for every single dollar of software it sells, it keeps about 90 cents before its operating expenses. That is a crystal clear sign of some serious pricing power. And the discipline doesn't stop there. The company consistently keeps its operating margins in the mid-40s. This financial strength is so key. It lets them pour money into innovation while still generating just massive amounts of cash. And where is a huge chunk of that investment going? You guessed it, AI. The result? Adobe has already generated over $5 billion in AI-influenced annual recurring revenue. This isn't some future promise, you guys. AI is already a significant, measurable part of its business right now. So the big question is, what is management doing with all that cash? Well, they're betting on themselves. Big time. A massive $20 billion share buyback program is happening as we speak. When a company buys back its own stock this aggressively, it's one of the strongest signals you can get that leadership believes their stock is a steal. And some analysts agree wholeheartedly. Morningstar, for instance, sees a fair value of $560 a share. Now, you compare that to its current price in the mid-300s, that suggests the stock isn't just cheap, it's a deep, deep value opportunity. But of course, that's only one side of the story. For every bull, there's a bear, and the bear case for Adobe is a powerful one. It argues that the company isn't a fortress at all. It's actually a castle, and its walls are about to be breached by a whole new kind of army. And some of these views are incredibly stark. You have analysts on the complete other end of the spectrum, slashing their price targets to as low as $280. And they're all citing one massive threat: significant disruption from artificial intelligence. So, for the bears, the first crack in the armor is that slowing growth. For the last decade, Adobe was a growth machine, right? Averaging around 18% annual growth. Today, that has been cut in half, down to the 9 to 10% range. For investors, that kind of deceleration is a major, major red flag. The whole bear thesis really centers on three core concerns. We've already seen the cooling revenue growth. The second is the rise of fierce new competition. And the third is the real potential for those legendary profit margins to come under some serious pressure. Because you see, the competitive landscape has fundamentally changed. The threat isn't just from other old-school software companies. It's from these nimble AI-native platforms like Canva and Figma. These companies were built from the ground up around AI, often with more modern tech and lower costs. That lets them innovate faster and offer services that are cheaper and sometimes, frankly, easier to use for a whole new generation of creators. And this quote from Argus Research, man, it just lays out the existential risk perfectly. While the bulls see AI as an opportunity for Adobe, the bears see it as a threat that could one day make Adobe's core products completely obsolete. I mean, why would you pay for Photoshop if an AI can generate a perfect image from just a simple text prompt?
So, there you have it. Two completely opposing views. A dominant titan on sale versus a legacy giant that might be facing extinction. The truth of where Adobe goes from here is probably going to be decided by the answers to a few key questions.
First up, the battle for AI supremacy. Adobe has its own powerful AI model. It's called Firefly. But the question is it innovative enough and integrated well enough to defend its turf against this flood of new, often cheaper AI-powered creative tools? Second, we have to talk about the cost of that war. Competing in this AI arms race requires billions in R&D. Can Adobe maintain its incredible profitability while spending whatever it takes to stay on the cutting edge? Or will those best-in-class margins finally start to shrink?
And finally, this is the million-dollar, or heck, the billion-dollar question for all of us as investors. Adobe is now trading at a valuation far, far below its 5-year average. Is the market handing you a gift, a deep value opportunity? Or is this a classic value trap, where the stock looks cheap for a very, very good reason?
So let's just lay it all out, side by side. The bulls, they're pointing to proven AI monetization, billions in revenue. The bears, they see disruption from these nimbler rivals. The bulls see 10% growth in a huge market as a win. The bears see a really sharp slowdown from its historic 18% pace. Bulls believe the moat is impenetrable. Bears believe its pricing power is now under direct attack. And finally, that valuation. Is it a bargain or is it a trap? Which brings us to the final verdict. But on this channel, you know the deal. The final verdict doesn't come from me, it comes from you. You've seen the bull case, right? It's built on dominance, rock-solid financials, and real AI adoption. And you've heard the bear case, focused on slowing growth and this existential competition. So now it is time for you to weigh the evidence and make the call. So, get down to the comments right now. Are you a bull or a bear on Adobe? And most importantly, tell us why. Your reasoning is what makes this community so awesome. And while you're down there, do us a favor and hit that subscribe button so you don't miss our next bull versus bear breakdown. Thanks for watching.